Hi guys, Lee Gettess here with the Market Sense for the week of May 24th, 2011. The charts I use come from the Trade Navigator software from Gettess Financial Technologies. First market we're looking at is the bonds, which have been pretty doggone impressive lately. They seem to be hanging right around this area here, which is, let's call it 125.08. They've been kind of either side of it and just hanging on there. If they can get up here 125, 27, 28 and go through there, they've got plenty of room to go. They could rally harshly. They've come so far up, though, you would think they might be due for a back off here. And if they do back off, the green line here is the 124.10 area. They also have 123.24 there, or 123.04 in this vicinity. I think all of those are possible. None of them would change the fact that this is a pretty strong looking market. And, in the way markets trend, you would expect they swinged up, down, and then back up again. This swing down and probably stops somewhere in the vicinity of this high, which, as you can see, comes right in this area. So that's what I'm kind of looking for, although I don't know if they'll do it this week. There's been so many of these gurus talking about how the Fed needs to start raising interest rates. And bonds trading the inverse of interest rates. You look at this market here, and I think the market is telling you, no, they can't. Moving into stocks, we're seeing a little weakness here, running the risk of having the first 4 weeks down since, I believe, January of 2010, I believe. The blue line that they're kind of hanging around at this point is 1314, let's call it. If they break down below that, you've got that purple line in the 1300 area, which, of course, there's psychological support there too. And then this previous swing low around 1290. If they break through those areas, boy, oh boy, a lot more weakness than we've seen in quite a while, actually. And there is a tendency for stocks to rally going into the Memorial weekend, and they just haven't shown any signs of that so far. Now, if they do get going, they've got this red line here. And I'm gonna call this a range from 1324 to 1327. If they can get above that, then things could still be good. The green line is 1337. Let's see what else. We've got this up here at 1356 up in this area, and that's very possible. Heck, they could even make new highs, and I mean possibly before the week's out. I'm not predicting that. I'm just saying that's a possibility. I think they might have one last drive in them up, but boy, at this point, they're showing no signs of strength during the normally strong seasonal period going into Memorial Day. So if they break when they should be strong, it's an old axiom that says a market that's not doing what it should is probably doing the opposite. So if they don't rally this week, wow, there could be substantial downside. And this break that we saw back here early in the year, that'll be nothing. They'll take that out, and we could have a couple years of downtime. But I'm not a long-term guy, so pay no attention to my long-term rantings. For now, we need to hold in this area and get back above 1327, or else they could be in some trouble. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking with us. Have a good week and have a great Memorial weekend.